Good morning. You're watching The Market right here on ET Now with me, Aisha Faridi, Avandabash, Ajay Sharma in the studios. And what a solid recovery in the market. It almost seems like day before was just a bad dream. So we managed to close in at the session highs. We're still to make up for day before's losses, considering that was the high point that we've had so far this year. So from that peak of 21,563 thereabouts, we've still got some margin to actually cover. But really not bad. The kind of strength that you saw yesterday. I mean, to think of it, Ajay, yesterday at open, we were sub the 21K mark. From there, it's been literally a perpendicular mover.
That's correct. 2980 or thereabout was the opening yesterday. But what is interesting, Aisha, is that yesterday's action it was led by banking. BankX actually has recovered almost 80% or day before yesterday's loss. But Nifty has only recovered about 30-35%. So what is happening is that it was Reliance Industries in the Nifty and HDFC Bank which were doing bulk of the heavy lifting. Rest of the contributors in Nifty have not really done that well. But there are individual counters, and especially in the broader markets, which participated very well to the recovery. And by the looks of it, by the kind of cues we are getting globally, it won't be a surprise if today as well we may actually attempt to take out the rest of the remaining of the losses made day before yesterday. But yeah, yes, day before yesterday appears to be a bad dream if you are, a long guy. But if you there is a very big kind of community who have been shorting around 2600, right? And yesterday's action also shows that the recovery is not on the back of big buying on delivery side. It is the short covering which is leading the recovery yesterday.
Yeah, absolutely. So that said, like Ajay was saying, there were movers within the broader markets as well galore. I mean, look at the move on a Hindustan Copper. It was a double-digit move coming in on a day when, people were pondering whether we've already surpassed the peak for the year or not. Metropolis, IRCTC, Nalco, Oro Pharma. And barring a few of these cases, Ajay, what's also interesting to note is that the recovery is being led by the underperformers of the year. Reliance, HDFC Bank, some of these metal names.
Exactly. I mean, for Nifty, if you talk, these are 2 or 3 names which were doing almost 50 to 60% of the rebound yesterday. Rest of the Nifty contributors are just not there. You spoke about some of the individual names. I was talking to Somit about it. Most of the names which have outperformed yesterday are the ones which have very specific triggers. Look at Oro Pharma, for example. That particular stock is higher than it has not only recovered day before yesterday's fall, but has gone at a higher level. Signed, Hindustan Copper, there's a lot of talk around some value-added beyond copper business being merged into Hindustan. Every stock which has done very well, Sona BLV, the EV player, quality stocks with specific triggers behind them are rebounding faster, at least with every bad, these are flash crashes, right? These are not sustained crashes. The other, quickly, I would like to point out a data. Aisha, you remember day before yesterday, we were briefly touching upon how much cash trove DIs are sitting on. And that is the Kotak AMC data. It's very good. You have to look at that. It is making a point that why in this bull market, crashes will be swifter and they will be shallower. And we got a perfect example of that in day before yesterday's fall. DIs came in and still they are sitting on almost 2 lakh crore worth of cash within various schemes and of course NPS as well. So that will ensure that any crash or pullbacks in the market will actually be very shallow. We'll pull up that data from Kotak shortly in the day. But yes, there's no need to worry, at least globally too. There are a lot of positives coming in.
Yeah, a lot of positives coming in. And it's interesting that we were talking about that data from what we saw December 20th versus what panned out yesterday, because that fall was ever so sharp with 462 stocks declining. And then you saw a 40% recoup of those losses in a lot of these names. And yes, that's pretty much a similar trend actually that we witnessed on Wall Street. It was the worst day since September. That's on the 20th. And then most of the major indices, as you can see last evening, rebound very smartly. The S&P 500 gaining smartly by 1%, the Nasdaq too. So clearly you had the broad market as well that came up from about 1% from its closing high. And you've got the Asian screen pretty much mirroring what we've witnessed on Wall Street. You've also got the Bank of Japan's October meeting that has showed the minutes have come out there, the inflation data. So all the indicators as well from the global markets are pointing towards the fact that Ajay, it's going to be indeed a very jolly or a very Merry Christmas.
Yesterday in US, there are 2 data points which are very positive for India and emerging market. One is dollar index has fallen below 102. It was hovering around 102.2, 2.5. Yesterday, it went decisively below the 102 mark, which is very good for FII flows coming into emerging markets and India. And we got a special analysis on FII flows into India later in the day. The other thing, the Q3 GDP which came in, it was way lower than what the street was estimating and markedly lower than the previous quarter's GDP was, which makes the case for a mid-year cut by the Fed much more stronger. That was the reason I think the US markets rebound very smartly. Look at that. Q3 GDP actually came in around 3% actually. That's the real Q2 GDP, but the reading of Q2 GDP actually came in at, I'll just pull up the data for you.
I think 3.2, 3.1,
yeah, around that. So that actually led to a very sharp recovery in global markets, and that's why Asia is also trading with greens right now.
Yeah, absolutely. It's, gains galore on the global street. I mean, and to think of it, off late, we've been aligning ourselves with the global market action as well. The day before fall as well was exactly aligned with what happened on the global street and across the board. It's not one isolated, a US market kind of case. Even Asia fell pretty much along with us. And that's exactly the case in the recovery as well. So holding out very well. Santa Claus very much around the corner. But looking at, what the market texture as well has been, like we've been pointing out, the FI data. And, just to pick up on the point, Ajay, that you were making, that there's still so much cash with the FIIs, which is sitting on the sidelines. So any dip, for sure, is going to be very swiftly bought into.
So, Aisha, there are
technicals aside.
There are two parts to it. One, okay, she's already watching some Santa-related planning for the Christmas weekend already, Awan. So what I was saying, Aisha, was that a lot of cash is sitting with DIIs. But since you brought up FI part, today ET has got a very good analysis and we'll get you pull you some data. India has been the biggest beneficiary or recipient of FI flows among all the key emerging markets this year already. So while DIIs are doing their bit in heavy lifting, FI is also not falling back behind. They have also started warming up to India. And among all the emerging markets, it's India which is witnessing highest amount of FI inflows.
Yeah, even if we look at the kind of month-to-date data that we've seen for the month of December, that has been fairly encouraging in terms of the FIIs turning net buyers. And like you said, yep, they're targeting the highest concentration as well when it comes to the Nifty. And it looks like this positive momentum is here to stay. We've been interacting with some of the top market veterans, and it's a mug's game to put your money in gold and crypto. That's the word coming in from Ramesh Damani. In fact, he advises one to invest now. Don't get scared by the volatility in the market, he says. Listen in.
Predisposition tells me remain invested, don't get scared by the volatility. And I haven't been for 30 years. I've always remained almost fully invested in Indian markets. So don't get scared by the volatility. The best is yet to come. I think, maybe India can't double in 3 years, maybe double in 4 years' time. But, it's still, the best place for a young Indian to be. I'm not a young Indian anymore. I'm reaching senior citizen level. But for a young Indian, you're 30, 35 years starting out, where are you going to put the money? I mean, you can't put it in gold or cryptocurrency. It's a dud's game to do it. It's a mug's game, in my opinion, to do it. You need to put in equity, which generates some returns for you, gives you some dividend, and that allows you to build your wealth, just like my generation built the wealth. As I told you, in 1991, when we started, the index was 1,500. It's closer to 75,000 now. Look at the journey that's taken place. You made 30, 40x on the index. Imagine if you pick stocks, how well you must have done during that period. So I think, given the sweet spot that India is in terms of its democracy, in terms of its demographics, in terms of digitization that is helping us, and the growing middle class in India. There's a growing middle class. Maybe 500 million people will be in the Indian middle class in the next by 2030. Extraordinary development taking place, and we're going to witness what a lot of economists call the J-curve curve. Once India's economy per capita goes over $2,500, $3,000 per cap. And in that, there'll be wide dispersion of people earning 10,000, 15,000. The average is 3,000, but there are a lot of people above that number. And that's going to power growth for a number of years to come. Demographically, as you know, we are the best positioned country in the world. I think China's population is projected to go over the next 30, 40, 50 years, maybe from 1.4 billion to 800 million. That's the kind of demographic disaster Korea, Japan, Italy, China are facing. India's population is still growing and still young. So the next 20, 30 years, we don't have a problem.
Okay, let's move on and let's talk technicals. We've got Shilpa Rout, Nooresh Merani joining in the show right now. Both of you, hi, morning. Nooresh, if I could come to you, what is the recovery yesterday telling you? You think it's sustainable, looking at the global screen too?
So yesterday was a quick recovery on expected lines. We went down, tested the gap at 20,950 to 21,074 and recovered from that band and recovered really well. So this indicates that we are now getting into a range, which is where you have 21,000 on the downside, 21,600 on the upside. We may see some choppiness at higher levels, so we may spike up a bit, but expect some bit of a choppy behavior on the index at these levels. And then maybe after this, say a 3-day break, we may see a better trend going from Tuesday, Wednesday. Overall, the bias remains positive. And now the only case is you hold on to the Nifty and keep looking out for stock specific opportunities. And the index may not be a buy at current levels, only on dips.
Interesting. Because the index did not recover, did not exhibit the same strength as much as Bank Nifty was. And within the index also, it was HDFC Bank which is doing bulk of the heavy lifting apart from Reliance. So beyond Reliance, things are not moving in the index too. So might as well shift to particular stocks. But for a moment, just analyzing yesterday's trading action, Shilpa Rout is also here. Shilpa, I was looking at the FNO data. It appeared that bulk of yesterday's rebound actually was on the back of short covering, right? The FI DIs were, setting each other off yesterday. It was not that some big chunk of FI buy actually came in. So is that short covering fully exhausted, or do you see some part of it can play out today as well?
Good morning, everyone, and thank you for having me on the show. Talking about the FIS data, a little brief about it. We have been constantly seeing that the FIs have been increasing the net longs from 60 to 66% also as of yesterday. So which means that there is some sort of buying happening. But of course, yesterday's data, we saw there was, negative, there was selling in stock futures, which might as well, portray today in the trading session where we might see the individual stocks struggling a bit more than, the index levels. So yes, of course, little choppiness might be here, but the support, like we've seen yesterday, 21,000 was acting as a very strong one, and Bank Nifty also at 47,000. But Bank Nifty, we saw HDFC Bank, Kotak Bank, ICICI Bank, all the major frontliners, running up to the highs. So which means that Bank Nifty will have the strength today as to continue. So little cautious. Optimistically cautious, I would say, not negative bias. But yes, any declines that you get on the index for both the Nifty and Bank Nifty, that should be some sort of buying opportunities.
So Nooresh, in light of yesterday's price action, I see your stock-specific tilt is towards large caps.
Yeah, so focusing on the large caps as of now, because they have come to a good risk-reward price points. So first is a buy on ICICI Bank. Earlier, 1,000 was the resistance. We broke out above those levels, went to 1,040. And yesterday, we are closer to the 990,005 mark, which is where it's a retest of the breakout on at around that point, it becomes a good risk reward trade, wherein you expect after this retest to go make a new all-time high again. So at these levels, you have a small stop loss at 975 and a target price of 1100. Second is a buy on Maruti, a very similar structure. The stock had made a top around 10,000 almost a couple of times in 2018. And then in 2020 to 23, that level continued to be a resistance. We went up higher to 10,800 levels. And now we are back closer to 10,000, which is where again a risk reward entry comes in. A stop loss at 9,800 and a target price of 11,000.
All right, sticking to the large caps, ICICI Bank as well as the Maruti Suzuki. And Shilpa, let's find out what's on your radar, your two buy calls.
The buy would be, again, yes, a mix of large cap and mid cap. The large cap would be, I have a buy on NTPC. NTPC, yesterday again, closed above 300 levels, which is very positive for the stock, with a stop loss of 295 from here. I believe it can do 313 to 320 zones. The other one would be a buy in ICICI Pru. ICICI Pru, like we saw that, from the 200 DMA of 510, the stock has taken very strong support and, it has moved up. So with a stop loss of 508 from here, one should look for targets of 540 and above.
Thanks very much. Those are your stock-specific strategies. Stocks and news as well. That's something we should highlight. We've got Anisha right here with us in our studios. Everyone's in the Christmas spirit, I think. So let's get in a view then, Anisha, on the logistics sector, UBS's latest note.
Yes, UBS has come out with a fresh initiation, and it's a mixed basket. They have a sell call coming in on Concor, buy on delivery, and as far as Adani Ports is concerned, they maintain a neutral stance. Now, they prefer delivery on the growth and profitability transition that they're talking about. However, for Adani Ports, they believe that the risk-reward is balanced given its valuations limits the potential upside, and the modest organic volume growth trajectory is already factored in, and that's why they've come out with a neutral call on that one. Cautious on Concor given that the market share is something that they have continuously been losing. There's a lack of shift towards the rail traffic, and the valuations are relatively expensive. But just I want to highlight a bit more on Delhivery today, because they are talking about how it's consolidating the inflection on the parcel growth. The spot on integration is something that is also scaling up for the company. There are two drivers that they're talking about. One is, of course, the express volume growth, and the integration issues are behind. As far as the volume growth is concerned, remember from that COVID high, there was a sharp decline in the express volumes as well. But slowly and steadily, the volumes are coming back, and that's something which is been lied by UBS for now. The target price for Delhivery stands at around 500. And in terms of the other things, they like that the company has a strong moat and the competitive leadership.
Yeah, I buy the argument in Adani Ports as well as Concor, but Delhivery, that's quite the interesting pick, right?
So among all the consumer tech companies listed last year, I think Delhivery is the last one to start moving. So
Yeah,
there is
hasn't
margin
done
of
much.
safety also compared to the other ones.
And that's exactly their point against the likes of Concor and Adani Ports. But yeah, Zomato ship rocket, and thank God for that clarification.
I know it was a late hour, but nonetheless, that will go a long way in kind of a sweet concern, because after Blinkit, and this could have been a $2 billion acquisition. So it's
Too
not
big to chew kinds.
Yeah, and it's not small that the market will kind of wait for it to get digested or get announced.
The
Market
stock would have reacted
today
right
itself.
away. Yeah.
But now at least the clarification is out, and that's why we are still highlighting it at 8:15, because the clarification is out that Dipinder Goyal has said that they're not looking at making that acquisition, at least at this point of time. They are likely to continue to focus on their current business, and that's the kind of maturity the market was expecting from the management, because capital allocation issues was the thing of 2022 which the street did not like. The management learned their lessons, talked about profitability, and are getting a lot more cognizant and conscious of the capital allocation decisions that they are making. So not going away in a hurry to buy ship rocket, waiting by to consolidate their current business before moving forward. A couple of brokerage notes have actually also written a note. Jeffries was talking about how as it is, there's a low probability of this to play out, but if it would have been negative for the counter. So that's pretty much out. There's another note from UBS that I want to highlight, because that talks about the kind of volume traction that the industry has seen in the last month, and in November the entire industry has actually showed a bit of a decline. It was the third straight month of soft demand coming in. So despite that festivity cheer, people are still not clearly ordering in. In fact, the industry volumes, as I talked about, was down about 2% month on month. Zomato's volume, however, down 1%. So it's doing still a bit better than the industry if you look at the glass half full. And overall, the market share is improving. And December is, of course, a better month for these companies. So hopefully, there'll be better traction in the month of December. And with this clarification on ship rocket, that will also support the prices today.
Yes, indeed. So clearly that clarification was much awaited by the markets, and it has actually come about. They've completely refuted the ship rocket buyout news. Anisha, thanks so much for joining in and giving us that heads up on the stocks to watch in trade. Tell you what, we'll take a very quick break right here on the show. Lots more market talk lined up when we return.
All right, so let's go across to Sanjeev Bhasin, who's joining us, who's back in Delhi after his tour. Sanjeev, good morning. Enjoying the Delhi chill once again. I saw you were taking blessings of Shri Jagannath Ji over this weekend for Indian markets and investors, right? Where all did you go?
Yes, good morning, Ajay. It has become cold in the last 2 days, and yeah, when I came back. So I was in Tirupati Balaji. I took his blessings 2 days back in Hyderabad. Then I was in Bhubaneswar. I went to Jagannath Ji and I took their blessings. And in all this chaos, we saw this huge fall. So hopefully I'm back, and I think things will reverse. So extremely positive on the market. Took the Lord's blessing for yourself, for me, for the families, and for the investors, that we see a rocking 2024 and beyond.
I'm sure we would, and we have guides and coaches like you. So the portfolios of our viewers would also equally rock. So yes, it was appeared to be a very single day kind of a flash crash. So are you positive? Because see, I've been observing your commentary for almost a fortnight now. You were positive, but at the same time you are nudging the investors. If you are sitting on very fat profits, do take some profit off the table as well. So what's the positioning right now in the market?
Yes, Ajay, and we've been cautioning you that the mid-cap, rally was unsustainable. It needed a sharp correction, and you got a sharp correction, 3.5% on a single day and beyond. But that is where the feeling of missed house is tremendous. Mutual funds are sitting on cash and they try to time the market, which is unfortunate, and that is why they are now latching on to any correction. So I still think that we are headed up. Let me also clarify. I did not expect the dollar to start to trade lower so fast. Now the dollar, if it breaks 100 for any reason in the next 2 weeks, Ajay, all hell will break loose. Emerging markets will go through the roof and the foreign flows will become even more dynamic than you thought. So I am very, very positive. And in fact, China's comeback is now indicating that commodities are strong. So Ajay, in this 3-4 days visit, I transcend the country. I see what's selling, what is not. I cannot but tell you the retail investor is putting his where his mouth is. The SIP is only gaining traction and they are unfazed by these one-day corrections. Secondly, Ajay, the length of the breadth of country, construction activities at its highest. Tata Steel, TMT bars, Ashok Leyland tractors, Ashok Leyland CVs. You can see the length of the breadth of the country, that how fast they are. So if you see the ground reality, there is a lot of capex which is moving. And steel, cement, CVs are the best indicators of how the economy is chugging along. So I think this is a time to get more into large caps. If you recall, about a month back, we said HDFC Reliance will lead this rally. By the way, they have hit a 3-month or a 4-month high. And I still think that the Nifty to new highs will be brought by HDFC Bank and Reliance.
Well, you're right. Yesterday, HDFC and Reliance did, rebound and contributed most to the rebound of Nifty. But Awan and I were just discussing that data which you are kind of referring to on the dollar index front. Sanjeev, I'd like to pick it up now and tell you that India has become, in the last 15 days, the biggest recipient of all emerging market flows. India is the highest, $20 billion this year, making it the biggest recipient of all FII flows among emerging markets this year. So even though percentage of FII holding in India is low at 17% right now, the value has topped $700 billion first time ever. So what you are referring to, that this could accelerate if dollar cracks below 100. So this is exactly what we were discussing earlier, isn't it, Awan?
Yeah, absolutely. And the numbers really speak for themselves. A solid $20.2 billion. That's the kind of flow and the assets that we've seen into India coming in. But that aside, you're just bringing up the point of those laggards making a comeback. Which sector, Sanjeev, do you believe is it that we will see some of those underperformers, apart from what you've already flagged off, in the coming year really making a smart comeback?
Yeah, good morning. Awan, it is going to be commodities. Cannot have the China slowdown persist. Commodities are back. Steel prices are going to go through the roof. In fact, from Tata Steel management, we learned that the TMT bars are seeing huge traction. Construction activity, road building, you name it, and Tata Steel. Tata Steel, by the way, is the third largest steel producer in the world, 34 million tons per annum. And you can imagine what even a 10% rise in prices mean. I think Tata Steel is a clear outperformer. Before the budget, you will see 170 on Tata Steel. Second pick would be Ashok Leyland. On a year-on-year, there has been a 9% increase in their sales in commercial vehicle. They are gaining more market share from Tata Motor on the CV side. Their bus market, they're the third largest bus maker in the world. And as you are seeing, it's evident when you go into the Indigo flights, Indigo is going chock-a-block. You're talking of more airports, so hence GMR its new highs. But the route from the airport terminal to that plane is all about Ashok Leyland. Their ICE, internal combustion engine, is doing extremely well. Intermediate commuting ACE, that is what is doing extremely well. And their bus market and CV shares are doing, their market share is gaining. At 170, I cannot but see this stock hit 250 in 2024. So in these two large big names, Tata Steel and Ashok Leyland are my two favorites. And like I said, on the trading side, we think HDFC and Reliance are now the big heavyweights which will drive the index back to 21,500 and beyond.
Okay, and I know you track Z Entertainment, and there have been so many twists and turns, quite much a saga that spun out. Given the latest news that we have on Z Entertainment, with the fact that they have about a month to, extend their merger talks and the discussion deadline, what is the outlook on Z Entertainment?
In fact, Awan, I have a buy call, and we have, we have clients who have bought it, and they keep asking me, you become bullish on Z. So in fact, if Z does go to 400, which is my vision, then I will write a book or go and make a movie. I have never seen so many dramas and twists and turn in any, the favorite love stories of ladies which they read. And for good riddance, it's about time we got the act together. It is a very showcase. It's a very poor showcase of how these things have been prolonged way beyond any mean. Sony is there and it's making an open this thing of 57% stake, and yet you have this 3% of the Goenkas who have been, I think, arguably one of the worst promoters. It's a done deal, Avan. It is just a matter of time. Walt Disney is talking of merger with Paramount. It will create a $400 billion company conglomerate, and here you have Z, which has the largest market share in struggling at a 25,000 crore market cap. I am saying this is a no-brainer. 450 is coming in Z, and the merger talks or whatever is the correlation within the NCLT and all is all through. It is just a matter of time. So if you can digest the daily headlines on the newspaper, you will make a lot of money in Z. As a disclosure, this is one of our holdings and has been for the last 1 year.
Forward to that film as and when, and if it actually does come out. But speaking of films, interesting releases, Salah, Dunki, and there have been some pretty interesting blockbusters, if you will, and that of course proves to be good news for a sector that was struggling due to the pandemic. What does this spell out, and have you booked your tickets, Sanjeev?
Well, I wish I could, but there is a heavy marriage season, and I've already missed a couple of functions at some of the home, functions. So I am busy with marriages in the next week, and I think movies are best seen on Netflix for me whenever I get the time. But like you said, Avan, it is a very, very good time. The Christmas cheer is there before us. The Nifty is at all-time highs. Entertainment, travel, tourism. And people are actually spending the way they never thought they would. So that's a very good pent-up feeling. On the movie front, I think PVR Inox, with its expansion and its brand into a lot of more cinema complexes, they are going to be laughing their way. But at this time, I think the functions are overtaking the movies because there are a slew of weddings and other engagements, which at least in North and most of the Indian side are seeing a lot of traction. That's why you've had almost 28 lakh weddings in this period, and almost 4 lakh crore which has got spent on all that.
Okay, let's also get in Lisa, our colleague, to talk about Siemens. There's a lot of commentary coming in. Apparently, there was also an analyst meet where they've communicated the plans going forward. Guys, we'll just come to you. But before that, Lisa, tell us, what are the main communication or message to the market from Siemens?
Right, so Siemens conducted their analyst meet, and quite a positive outlook which was highlighted by Siemens. Now Siemens, as we know, it's a Capex themed, it's a proxy for Capex theme. So they said that the Capex outlook for India, that remains strong, and also the private sector Capex, which was not seeing any pickup, now that is at an inflection point, and the inquiries are turning into tenders. So yes, talking on their segments as well, they mentioned that the power transmission segment is seeing substantial pickup in the inquiries, as well as on their mobility segment, especially that 9,000 HP locomotive order. It's a sizable order, and the street was worried about it being margin dilutive, but the management allayed those concerns and said that it is not going to be margin dilutive, and they are confident on maintaining the profitability for the company going forward. Now an update coming in on the recent announcement that Siemens had made of Siemens AG acquiring the stake of Siemens Energy for around 19,000 crore, and also on Siemens Energy business being demerged. So the company mentioned that they have received formal requests from Siemens AG to initiate exploratory steps to evaluate the demerger of energy business going forward. So that's the main key takeaways coming in from the analyst meet of Siemens management.
All right, thanks very much for giving us those details. We'll be watching out for this stock on the back of those key takeaways. Sanjeev, wondering what you track within the entire capital goods space, how you've looked at the progress of Siemens as well, the individual businesses that it operates in. If you track this one and any other stocks within the space you like?
Yes, so Avan, we have a basket of ABB, L&T and Cummins. Siemens was our top pick some time back, but it has gone way beyond the price performance. And yes, this uncertainty on demerger did cause a little bit of, unclarity. I think they're trying to come to that, but we continue to be overweight on L&T, ABB, Cummins. We think these are still going to see more upside because never in 25 years have you seen the type of capex which they have come back with. And if you recall, I even mentioned a company like Nestle, which I told you was investing 5,000 crore last year. They said after 15 years in a capex in the next 2 years, Nestle has hit a new high. So I think capex in these large caps and construction, hydrocarbon, electrical companies which are cash rich are going to be the key. So I would still suggest a basket of ABB, Siemens come in. You can add a Thermax and a Bharat Forge, and you have the complete basket of capex stocks.
Okay, let's also get some stock checks on the tech side. Nooresh is here. Nooresh, one of the stocks which has done phenomenally well in last 2 days, when the market was cracking big time and also on the rebound, is Oro Pharma. Look at that, almost nudging the 1100 mark. Aurobindo Pharma will come up on your chart. What exactly is it a breakout which is happening on Oro?
So this has been one of the most surprising moves in terms of speed as well as continuity. The stock has now broken out into new all-time highs. The stock corrected almost, if we go back to COVID, the stock middle of 300, 350 went back to 1050. And by 2023 March, we were back to 450 levels. So it has seen wild swings. And now we are back above 1050 levels. So a new all-time high generally is an indication of a fresh trend. So out here, the stops are not very far away. One could keep a stop loss at 1030 and go long. So a good breakout into new all-time highs, and a flag formation which happened for the last 3-4 weeks between 1000 to 1090 levels. So I would expect a quick target price of 1200, 1250 here. So yeah, a breakout into new all-time highs.
Let's get in your take purely on some of those stocks that did see a very smart comeback after being thrashed the previous trading day. What's the outlook then on a Hindustan Copper on the charts? And have you tracked a Shyam Metallics, for instance, which rallied nearly 10% yesterday? Shilpa, that's for you.
Okay, hi, sorry. Hindustan Copper, yes, of course, it has seen one stellar move, right from 160 zones to around 215 now. So the near-term support for the stock is now at 210. So I believe one should hold on that trailing stop loss of 210 and still stay long for targets of 235 to 240 zones. So this is one of the best buy in the metal sector and very positive, and years of underperformance now, it has shown that upside move with a lot of strength and momentum.
Okay, fair enough. That's the view coming in on some of those movers. Meantime, given that we are seeing this overall manufacturing theme play out, quick take then from you, Sanjeev, as to what's looking good within this space.
By the way, Avan, I must, go back to your previous point, which Shubha said on Hindustan Copper. I own it from 35 rupees, and I can tell you it's the third largest copper mines in the world. And Hindalco and others do TCRC, meaning they do treatment charges, refining charges. The real copper, they are smelters. The real copper is in Hindustan Copper, and its value is just getting unlocked. Actually, this stock can be even higher than where you can imagine, because the management has been more robust, there has been autonomy, and copper prices are going through the roof. As a disclosure, this is with me from the last 8 years. Now, coming to your manufacturing side, it is clear that, whether it's textile, whether it's autos, whether it's IT, all the PLIs are picking up space. And like I said, for the manufacturing, the best conduit is the CV market, which is evident from the traffic which you see on commercial vehicles. Hence, Tata Motor and Ashok Leyland particularly, because they're getting more market share from Tata Motor on the CV side. They are concentrating more on their small product called Dost, which is a intermediary for transportation, and the bus market is raring to go. So I would say Tata Ashok Leyland is arguably one of the best and most underpriced stock. 250 is coming in 2024 in Ashok Leyland as a key player in this manufacturing ancillary and as a user over there, which has to be the transportation source.
Sanjeev, hi, morning. Are you relieved by Dipinder Goyal's clarification on news reports flying around that they're looking at buying Shiprocket, and that too for a valuation as high as $2 billion? That wouldn't have gone down well with the street, right?
Yes, Aisha, good morning. Definitely, Aisha, it would have not gone down well with the street, given what we had with Blinkit, and $2 billion for a company which is not in profit is a huge sum. So concentrate on your core business. Don't go into things which you're not so familiar with or which may sound exciting, because you're giving an exit to promoters who I think are fully priced. You've seen the case with the Byju's and so on. So all these names and businesses sound very, very attractive because of the marketing, but the real essence is in the performance. So stay with your business which is on core and which is only going to gather. We've had a lean maybe quarter or a month, but I think Zomato is here to stay. And if it continues on generating cash, that should be the key for the promoter and the shareholders.
Okay, Sanjeev, stay with us. Ami Organics, that's another company which is in focus as the overhang from the stake sale by the Chavotia family is finally over. The company is also now trying to enter into a niche areas of growth as well, signing agreements with other players. Let me take it across to Srishti and find out what exactly the story is currently, Srishti, with Ami Organics.
Well, yes, Ami Organics is in focus as the major overhang is seen to be gone for the company, as Chavotia family has finally sold a majority of their stakes in the company. They have sold around 12.5% stake at a price of 1,030 rupees, but they still continue to hold around 5% stake in the company. But the key to note is that in the list of the buyers, you will see marquee names from the likes of BofA Securities, Goldman Sachs, Morgan Stanley. They all seem to be entering, wherein ValueQuest Investment and Morgan Stanley Asia has bought around 2% stake in the company, and BofA Securities Europe, ICICI Prudential, Malabar India Fund has bought around 1% stake in the company. So that's the big announcement coming in from Ami Organics. But the big question is that what is making all these marquee names bullish on the company itself? So let's try and find an answer to that. There have been slew of announcements made by the company in the recent times as the company is trying to enter into the niche areas of growth, and I would like to highlight three of them. Just yesterday, the company announced their foray into the battery cell electrolytes, where the company has signed an MOU with a global manufacturer of electrolytes for manufacturing them for battery cells and allied materials. The company will be investing 300 crores to set up a new plant in Gujarat for that. Another recent announcement made by the company is that they are planning to upping their game with Fermion, which is a Finland-based company. Just in September, they said that Ami Organics and Fermion have another multi-year, multi-ton, multi-million-dollar agreement for additional advanced pharmaceutical intermediate. They have entered into an agreement to manufacture 2 advanced pharmaceutical intermediate products as well, and this is what going to be reflecting in the numbers in some time from now, because the supply of one of the intermediates will happen this fiscal, while the other 2 intermediates will go for validation batches in Q4, and the commercial supply will start from the second half of FY25. Other than that, their entry into the semiconductor industry. They have acquired 55% stake in Baba Fine Chemicals. That's a custom specialty manufacturer for semiconductor industry. So we'll see that Ami Organics is trying to upping their game by entering into the niche areas of growth, while the analysts believe that the second half of this fiscal onto the financial front could be better as compared to the first half as well.
Thanks very much, Srishti, for highlighting those details. And before we let you go then, Sanjeev, let's get in a quick take as to what the outlook is when it comes to the entire auto space. Where do preferences lie?
Yeah, so Avan, like I said, I think Ashok Leyland in the CV space, Maruti in the four-wheeler space, and you can add a Hero Moto, which I think is gaining more traction on the rural front. These 3 names plus Bosch on the OEM side, I think they make the best combination to write the auto story. Rest is evident in the prices, as all of these stocks are hitting new highs. But I would still go and put my money on Ashok Leyland for a 30, 40% upside in 2024. As a disclosure, these three stocks are in our portfolio. Bosch has been with us from the 13,000 mark. We continue to think 25,000 is coming in 2024.
Okay, that's the take coming in on Bosch. As always, bullish and positive. Sanjeev, great to have you on the show. Thank you so much for taking the time out.
Okay, let's do some check on Nuvama. Nuvama is a fairly recent one, but can you do a chart check for us, Nooresh, on Anand Rathi Wealth and 361? Which one looks stronger?
So, in terms of a relative move, Anand Rathi has gone berserk in terms of price action from July. The stock was 800 to 1,000 rupees. The stock has gone up to 2,500. So that does not give you enough risk reward. But if you look at 361 Wealth, it's just moved up. It made a fresh breakout into new all-time highs, about 570, went up to 730. And now we are closer to 630, 650 levels. So out here, the stronger one in terms of performance has been Anand Rathi, but the risk reward looks more promising in 361 Wealth, wherein one could be looking at accumulating at 630 to 590 levels and expect again a move back towards 730 to 800.
Okay, that's the view coming in on some of those movers, but let's hear it out then from Ramesh Damani. He shares some of his big calls for the year ahead. Let's listen in to his expert take.
Broadly, a well-managed company, whether it's a small cap or large cap, is still a good investment opportunity, and I would remain invested in them. The leadership, as I keep telling, is very much intact with the public sector stocks. They probably have a largest way to go still, because typically if you see in the bull market leadership, the stocks go up 10x, 20x after some point. So I would remain invested in good quality businesses. Tech service or BPO will continue to outperform dramatically because the cost of real estate is so cheap in India, labor is so cheap. I have not been able to fully discount it yet or fully be conversant with what happened to my tech stocks. Will the employment shrink because AI will do the code for these people? Or will it expand because there will be more need for people to do this? I'm not really sure yet. I have my basic tech investments still in place. I haven't moved them around much. But what the impact of AI is going to be is something that maybe in the next 5-10 years will be clear. Is not clear to me right now.
We have Sandeep Sabharwal back on the show after we fixed the audio. Sandeep, morning. Aisha and I were just discussing how the asset management space in India is evolving on the listed side. And also now that the representation in the markets is going up, you've been a part of asset management, industry for long. How are the business dynamics, competitive landscape, and the yields now?
So there was a phase in between where the regulator was trying to get the cost down for investors. So at that time, we saw that despite the assets moving up, the profitability was not moving up, and the sector underperformed significantly. I think the change started from beginning of last year, where I think that phenomena stalled or stopped, and that was no longer the focus of the regulator. I think now what's happening is that now profitability improvements could be real for the sector, and the part of the asset management company today is that the larger players are becoming larger. Very small asset management companies tend to become successful because people tend to prefer, especially with the SIP culture, to focus on the larger names. So overall, the space is well placed. Now, many of these stocks have actually doubled over the last few months. So to that extent, right now, they seem to be fairly valued to me. But longer term, they should be fine.
Okay, that's the take coming in right now on how is it that one should be reading these AMC businesses. Sandeep, in the last 2 months, what's been your portfolio positioning? Anything that you may have added or profit taken from?
So we reduced exposure in the sugar space once the dynamics change, because next 6 months are a bit uncertain. But subsequently things might be good, so we might add after a few months. We have added into stocks like the Voltas, Interglobe Aviation, because Voltas, I believe, is undervalued relative to growth prospects, and there will be a turnaround in performance next 2-3 years, and I believe it could perform like Lupin performed after the turnaround. So larger mid cap not doing well at a point of time, but revival is possible. And Interglobe Aviation, I think, is uniquely positioned in the Indian aviation space with the troubles of many of the other companies. And with fuel prices under control, I believe that profitability improvements could be stronger than what most anticipate.
Sandeep, what about your views on the latest note on the logistics sector that's come out by UBS? While they're talking about limited upside or a very cautious stance for the likes of an Adani Ports and a Concorde, they believe that delivery has potential. They've pegged a target at about 500 rupees on this stock. Your view on stocks within this sector?
Yeah, overall, this is fine, but I think the growth has been relatively muted in the sense that it's not that these companies are growing at a very rapid pace. And delivery, I think it's more a question of trying to forecast a turnaround when it doesn't seem to be apparent, because even the last quarter results were disappointing and competitive intensity is strong in the space in which they operate. So let's see how it goes. Let's see whether they can also turn around like some of the other new gen companies got listed a couple of years back. But right now, it doesn't seem like.
Sandeep, time and again one wonders whether one needs to pause or ease off from railway and defense. And I'm going to talk about defense particularly here. I mean, yesterday Ramesh Damani as well was highlighting that within PSUs, defense is what's going to lead the charge. While you could debate about valuations being rich and the stocks having run up a lot already, but their order book continues to bloat almost on an everyday basis. There are some new order wins coming in. And the managements as well are now upping their guidance and, revising them for as soon as FY24 itself. Anywhere you would look to add positions at the current levels?
Current level, I'm circumspect in buying because the run-up has been so rapid and these have become favorite stocks of many investors. Like even the speculative activity is very high. But on corrective moves, stocks like HAL, stocks like BEL, or stocks even in the shipbuilding space, etc., I think all of them should do well longer term because the revenue visibility is so great that they will ultimately keep on performing. Now, for someone who owns, so I always say that for many of these sectors, for you, if you own, you should not be selling. But if you don't own, you should wait for some bad days of the market when there's corrective moves and there are sudden sell-offs to add.
Very clear and categorical. If you own, no need to sell. But if you're looking to buy, wait it out and wait for a dip coming in. In fact, just yesterday we were chatting with the managements of both BEL as well as Mazagon Dock, and both the companies have now upped their guidance because of the order wins recently that they've had. Let's hear out a slice of that interaction.
The total fresh orders during this financial year, I expect, would be crossing 6,500 crores. As far as this European order is concerned, we expect a follow-on order soon, maybe another 6 months.
We have already reached close to around 23,200 crores. So definitely, which is higher than what guidance we have given. The reason being, some of the procurement process have been fast-tracked by MOD. So quite a few, one or two more orders are there in the pipeline. So definitely what my indices is, it will be around 25,000 crore plus. But in these defense orders, now only three months are left out. So it's very uncertain whether something will come this year or spill over to April.
The other space which is doing very well, Sandeep, is between the QSR/beverage space. Varun Beverage now wants to diversify into South Africa. You also saw Devyani talk about going to Thailand. How do you analyze these strategies by these companies? Because, our domestic markets, have they been exhausted enough for growth that they are wanting to go abroad? Because the street wants, more answers on that. We've been trying to get more, but how do you analyze this move?
Yeah, for someone like Varun Beverages, because they are going into an existing client, which is like for Pepsi, then it it's not such so much of a concern now. We don't know the dynamics of that market, etc. So we have to rely more on what the company says or do more research on that. So I think that should be fine now. How much they are spending to get into it vis-a-vis the returns they'll get is something we need to still analyze. But overall, it seems okay. For QSR companies getting into other countries, I think that's more a tougher thing because they are expanding rapidly here also, and then they want to get into other countries. And we've seen in the past that many of these companies have got into other countries, then suffered due to slowdown, forex changes, etc. I'm not sure if it was Devyani only which took a hit because of the Nigeria currency crisis. I guess it's Devyani only. So I think those are the issues investors need to keep in mind.
Actually, that was Sapphire. Sapphire had exposure in Sri Lanka, right? And Sri Lanka had a major issue.
Economic crisis.
Yes.
Yeah.
The stock has not been able to come back to that level as well even now. Though it is off lows, it went to 1200 odd, but still it's kind of, quite away from the recent top it made. All right. So beyond that, the other thing I wanted to discuss, Sandeep, with you is there is a view in the market that the way dollar index is crashing, metals is a very good play. The other camp believes that since US and China growth is under question, it will be reduced to a trade only. You better not get into some of these names for the long term because the outlook is very disinflationary for commodities. Which side of the camp, and how would you approach metals in this debate?
Yeah, the second point is absolutely right, and you analyze the entire thing in a single line very well because if economies are going to slow down and the slowdown seems to be likely, like even in the US yesterday, as data on jobs or Nike's result where they are indicating softer consumer demand. So economies are slowing down. Now traders are excited because interest rates have peaked out and they believe that at some stage rates will be cut, etc. But then rates will be cut when the economy slows down. When the economy slows down, then it impacts earning growth also. So I think that's the tougher picture right now. So metal, yes, I would think that they have underperformed so much. There is possibility of a trading rally in 2024, but I think it will be just a trading rally.
Okay. Nooresh, is that your sense as well, that it's a very short-term strength signal that you're getting on the charts for metals?
Yeah, so in metals, there have been differentiated moves across the board. So you have a stock like Jindal Steel, which continued to make new all-time high. You have names in the, metals and mining space. Mining space has been totally different. You've continued to see new all-time highs on or strong moves in a GMDC, NMDC, even a Hindustan Copper now, Orissa Mineral Development Corporation. So if one wants to play this trend in the metals, the better way is to go through the mining companies. That is where the trend has been much stronger. Yes, a short-term pop is possible in a lot of names like Tata Steel, which have broken out. Would not expect a move which happened is similar to 2021. So one has to now look at the next, say, a different ancillary of metals wherein you go towards mining. Then there are specialty steel companies which are also hitting new all-time highs. So you have a Sham Metallics hitting all-time highs or a different Jindal Stainless SR. So the view is to go away from the known large names like Tata Steel, SAIL, Nalco, go towards other names in mining and specialty steel.
Okay. Some of the two-wheeler stocks have been doing very well, Bajaj Auto and TVS. Shilpa, from the futures and options side, because these are big liquid counters on the F&O side and people like to ride it positionally as well. Pull up last 1 month chart if you could, compare it with TVS versus Bajaj. Both have export play and both are upping their game as far as the premium end of the market is concerned. Look at that, almost a 500 point rupee move in Bajaj Auto in a month. Which one appears to be a stronger bet from here for the near term, Shilpa? TVS or Bajaj?
Bajaj, if you see the option chain, the support is at 6,000 and the resistance at around 6,500. The stock is completely in the midway, where I would prefer it as a no trading zone because it is in a no man's land now. So either on dips towards 6,000 if you get, one may enter or wait it out till it sustains above 6,450 to 6,500. Otherwise, avoid Bajaj Auto right now. Whereas TVS Motor, it has a good risk reward right now, with a stop loss of 1850 from here, one can again attempt a long for targets of 2000, 2100 zones.
Right. Okay, just few seconds to go and we should be hitting those pre-open rates as well. Sandeep, two stocks, which have been the underperformers. One has been pinning their hopes for a while now on a recovery in them. Reliance and HDFC Bank. And especially the price action that one has seen in the last 2 days on both these names. And we can just pull up, the delivery data as well and the kind of price action that we've seen on both these names. The fact that HDFC Bank day before as well did not fall at all. Yesterday was leading the recovery, and the move that Reliance made yesterday. Do you think these are going to be the stocks for, the next interim move of the market?
HDFC Bank is coming out back after a long period of underperformance. So, because valuations at some stage fell much below quota, even slightly below the ICICI Bank at some stage. But now I think with the recovery and underperformance of ICICI Axis, that valuation gap is more or less bridged. My view on private sector banking is they very little to distinguish one bank from the other today, because most have NPAs under control, most are growing at a steady clip. So I think it's just a valuation thing. So if people are owning some other bank like Axis or ICICI or any other private sector bank, there's no reason to shift to HDFC Bank, as used to be the phenomena a few years back where those banks are grappling with the NPA issues. So I think that's my take on the banking side. On Reliance specifically, it's underperformed so much. Reasons are tough to gauge, because if the reason was that they are doing too much of Capex, etc., then many of the other very Capex intensive businesses, even the Adani Group, etc., it's performed very well. But intriguing why the stock has underperformed so much, and the underperformance itself leads us to believe that 2024 it should ideally be doing better.
Sandeep, the other part of the market is also wondering about, the PSU rally at large, and I'm going to keep banks out of that because they actually have underperformed somewhat, led by SBI. But, they're wondering whether next year is going to be as good for the PSU pack, or do you think we're pretty much getting toppish, at least in the near term, with the PSU rally?
The PSU rally started with the better performing sectors like companies in defense and to some extent in railways, where actually there's been a fundamental change in terms of the growth pattern. Then it's percolated down to all kind of PSUs, where in some cases there's no improvement at all. So I think people need to be careful what they are buying. It cannot continue like this, and many of the PSU companies are trading at a significant premium to similar large private sector companies today. So I think it's tough to give this kind of valuation premium to PSUs, because generally the way they operate and the bureaucratic structure, etc., still remains. So some sectors will obviously in the PSU basket will continue to do well, but not the entire space as it's done in this year.
Okay, Sandeep, always good to chat with you. Thanks for taking the time out and joining in. I didn't ask you, have you watched Salar or going to watch Donkey?
Donkey tomorrow.
Okay, great. Enjoy. We'll take the review on Monday, or actually Tuesday, given that it's a long weekend. But let's get in some mid-cap trading ideas as well. What's on your list, Nooresh?
So there's a good strength seen in all auto ancillary names. So that is where Varroc Engineering comes into play. The stock has given a breakout and is consolidating around this area for the last few sessions. So I would expect it to break out again and make a move towards a 700 level in the medium term. In the short term, 630. A stop loss to be kept at 500.
Shilpa, what about your mid-cap ideas?
I am focused on Dalmia Bharat right now. Dalmia Bharat looks really nice, at this placement with the stop loss of around 2180 from here. It's very well poised to test 2300 and above zones.
Okay, we'll take a very quick break on that note. By the way, the pre-open rates are giving you some amount of comfort. It's not a big rara move. But yeah, marginal positive as well after the recovery that you saw in the markets, especially in the last gap. That in itself is a good sign. So comfortable at the 21,300 level. We'll take a very quick break. When we come back, brace ourselves for the market open this Friday.